Today, we're looking at 5 dividend stocks. Some are up, some are down, but these are all fascinating to pay attention to in 2020. So ladies and gentlemen, let's jump right into this.
Drop it.
Welcome back, my passive income investors. I'll like to the first stock we're paying attention to here, which is one Warren Buffett has been recently loading the boat on. And this is a sector I don't understand very well, but heck, that doesn't mean I can't recognize a discount when I see it. And we're talking about Occidental Petroleum, not accidental, Occidental. This stock is trading 50% down from its all-time highs with a whopping 7.6% dividend and a PE ratio of 29. And I can't figure out why this stock is down so much. And I don't know if it's the correlation of oil kind of coming down over the last few months and maybe some other things kind of building into the circumstances that have led to this stock dropping. But when we go into this company's balance sheet, my goodness, ladies and gentlemen, this company in 2016 went from 10 billion to 2018 to 17.8 billion in revenues, and it has just been on a tear lately. So I can't figure out why the heck this stock is down so much. And even if we take a look at the dividends, I mean, we're not talking about massive increases, but from 2015 from 0.72 cents to 2020 to 0.79, nothing crazy huge here. But in the perspective of how high the yield is already and where this stock could be going in the future, I mean, pay attention, guys. You might be missing something very important here, which leads me into stock numero dos. We're talking about an aerospace stock. We're going to be talking about Airbus here, which is a company I haven't fully been able to grasp because whether you're looking at Boeing or Air Canada, like they're all over the place on how they perform. And for some reason or another, Airbus has not been doing that well. It looks like they're doing amazing considering they're trading near all-time highs, but wait till we get into the balance sheet. This company currently has a 1.15% dividend, and as of this year, they have no positive PE ratio because I don't know what's going on here, but they've actually lost earnings. And if we take a look at the overall chart here that we can throw up, just taking a look, guys, they are down $1.36 billion. So how does a company that is making $70 billion in annual revenues losing $1 billion? So that means they have to be spending 71 point whatever billion, which I can't fully grasp. So this is one that I would pay attention to just for the fact of why the heck is it down? Why is it losing so much money? And I just wanted to throw it in here as an honorable mention because the rest of these stocks are ones that you might want to consider buying. And yet the most impressive thing about all of this, guys, is how the heck are they increasing their dividends? My goodness, that means Airbus has to be losing money on their dividend payouts, and they clearly want to keep this as a fresh dividend stock considering they've actually increased the dividend since 2015, going from what were they totally paying in 2015? Here we're talking about maybe 33 cents up to 46 cents in 2019. But can that continue? Are they going to be able to keep up with it? If you own Airbus, pay attention to this, guys, because that's why I'm mentioning it. This is going to be the only stock that is performing negatively. The rest of these are going to be pretty interesting stocks to pay attention to going forward, which leads me to my third most interesting stock that's kind of related to Valentine's here. And we're talking about Cineplex, something people still go out to the movies. I still go out to the movies once in a while. Heck, I like going out on dates with my girlfriend. And every now and again, when a really good movie comes out, you know, we might go out. We'll try and build up those scene points and using our cards everywhere, you know, that usual stuff. But Cineplex has currently been on a bit of a bump lately, which might be a sign of a comeback after the stock dropped to a miserable, like the last few years have been miserable, down 50% with a dividend yield of 5.32% and a PE ratio, my goodness, of 58.6. But as of recent, we had some really good news going into the end of 2020, jumping the stock up 50% from its bottom. And I mean, you know what's going on here, guys. You've been to the movies before. I mean, in the States, you're probably looking at different aspects because Cineplex, I know, is like primarily a really big Canadian stock. And just taking a look, guys, you know their website. You can go on here. You can check out what movies are playing. You got a hot date. You want to go out. It's usually what you're going to do. And do you guys even go to the movies still? I mean, competing with Netflix and all these other companies, that's where a lot of the fear has been based around Cineplex, and they charge way too much for everything. I mean, me and my girlfriend are so cheap with Cineplex. We go to the dollar store and we pack our pockets up with dollar candies and pop because I think they try and charge you like $6 or $5 for like a small pop, which is absurd. It costs more than alcohol does, and now they serve alcohol, and the alcohol costs twice as much as alcohol usually costs. So, I mean, I'm not particularly the biggest fan of this company, but it's worth paying attention to just for the fact that they have such a major jump up as of recent. Now, taking a look at their balance sheet here. Now, the problem with this company is their total assets versus total liabilities here trade incredibly close, which means this company is very close to be trading at like null total assets. So, I mean, if they ever went bankrupt, you ain't getting anything as a shareholder. And taking a look at their overall financials, though, they've actually done a pretty good job with the revenues, but I think this has to do with their greed, which is what I hate, the fact that they think they can charge so much and get away with it. Heck, I wouldn't mind going to the movies and buying their stuff if they didn't make it so bloody expensive. And I'm sure many people that are just as frugal as I am are experiencing the same pains behind Cineplex, making it rather interesting. And the other really fun thing to quickly pay attention to is the fact that they've been lowering their dividends, which is absolutely intelligent because this company is going to be in trouble. So it's a good thing they're lowering their dividends, but can they have a comeback play? That's the question. So let me know what you guys think about that in the comment section below. Are you a big Cineplex fan? Which leads us into our next stock. Ladies and gentlemen, the one Bill Gates has been loading the boat on, one of Bill Gates' actually largest holdings, and we're talking about Waste Management. If you don't know what Waste Management is, you use them. There's a good chance you use them because it's just a company that deals with all the waste in like suburbs. Massive company, very stable company, recession-proof company. Everyone's got garbage. It's an incredible stock that I wish I bought and I just never did. And it has been trading at all-time highs, a 1.6% dividend yield, but don't shy away from that cheap dividend because when we take a look at the increases, you're going to be kind of shocked. With a PE ratio of 32, which is absolutely commendable because the stock's a great job on their balance sheet. Taking a look from 2016, I mean, it's only gone from 13.6 billion to 2018, where it's trading at around 15 billion. That is a pretty steady increase, and that primarily is going to be in correlation to population increase. As more and more suburbs go up, there's going to be more and more contracts for these companies to keep cleaning up that waste. So I mean, this is going to be one of your stablest, most steady growing stocks. And let's just take a quick peek at that price again here, considering if you were even buying this in 2018, the increase over the last couple of years has been absolutely incredible, up almost 50%. And then taking a look at that dividend yield before we go back into the balance sheet, this has been some unbelievable stuff right here, guys. Going from 2017, actually, let's do a 5-year report. Let's go down to 2015. The beginning of 2015, your dividend was 0.38 cents, where you're trading today at 0.51. So that's like a decent, healthy increase of about 60 to 70%, I do believe. So, I mean, holding on to this stock long-term in a 5 to 10 year period, you could be looking at quite an absurd dividend yield. I mean, you could be pushing to a 3% if you were buying it today, presuming everything keeps trucking along, and I don't see why it wouldn't continue the same similar pattern. This is a very, very stable company. And taking a look again at their revenues, let's just take a look at this little chart right here. Let me scroll up so we can see this. We got 1.6 billion on the bottom line, and then we're also taking a look at $15 billion in earnings as of 2019. Mind you, their earnings are down a little bit, but that could be in relation to a bunch of different things, maybe increasing trucks. You don't know what they're buying, which is probably leading them to better write-offs as well. But another incredible company. Do you own this company? Let me know in the comments section below. I don't own it. I want to own it, but I'm too greedy and I want higher dividend yields today, which is going to lead me into two more stocks that pay really absurd yields that I think if you were to buy them today, you're going to do exceptionally well in the future. But I am not telling you what to buy. I'm just kind of shining the light on some things because I'm not a financial advisor. But one of these I do own that I talk about a lot. But let's talk about the most popular one, which is Carnival Cruise Line, which just can't catch a break as of recent with the coronavirus. Thanks to this unpredictable pandemic, not a pandemic, let's not cause fear here, but a disease that is growing at a rate that we haven't seen a disease do in a while. It has been terrorizing this stock from all-time highs here. Anything to do with the gaming industry or basically luxury or, going out and kind of relaxing, boats, Disneyland, Las Vegas resorts, things like that. We're down a whopping, how much is the stock trading down from all-time highs? Let's see if we can get the peak here. Taking a look at a 40% discount, a 4.69% dividend yield, and a PE of 9.8. My goodness. Now, the reason I don't particularly buy these stocks is because they kind of aren't recessionary proof. If things tend to go bad, these stocks don't do well. And heck, we're talking about a coronavirus here that really hasn't affected their bottom line. It is affecting their cruise ships, though, but not really their bottom line so much. As if we take a look at their earnings from 2016, we've gone from 16.3 billion to 2018, where they're making 18.8 billion. Their net incomes have been a little bit staggered, not that great, but overall, the company's done an incredible job on increasing these earnings and their financials. And if you've never been on a Carnival cruise, because I never have, I'd love to know what you think about the experience. My uncle goes on them all the time, loves cruise ships. They seem to be an up-and-coming thing, but I don't know. Not my game. Don't really play in this area too much. But taking a look at the dividends overall, another incredible thing with this company is its dividend in 2015 went from 0.25 to today, where it's trading at a 50 cent, which means they've doubled their dividend in the last 5 years. So heck, if you can get a 4.6% yield today and skip 5 years from now, your dividend could be close to an 8, even 10% yield. Absolutely incredible stuff on this stock, and it is one I would suggest you keep your eyes on, as I will as well moving forward, as most of the dividend community, and heck, even most stock traders are paying attention to this stock, which leads me into my final stock, the one that I own, and the one that is going to be so incredible to continue updating you guys on. I did a full breakdown. I'll leave the link in the description below because I really enjoy this read, and I'm talking about GEO Group. This is a real estate investment trust, but the weirdest one I've ever come across, because we're talking about prisons. I'm not going to do a full breakdown on this stock because I'll leave the link to the video where I fully broke this down, as one of my largest holdings in my dividend stock portfolio. From all-time highs, this stock is trading down. I hope if I can get this to link up here, let's see if we can get this to line up looking at a 5-year chart. Currently, it is trading down as well, a 50% drop with 11.13% dividend and a PE ratio of only 12.35. Now, everyone has been hating on this stock. A lot of negative news. I don't think you have to go too far to understand what the negative news has been, but I am a positive junkie on this stock, and I really believe this thing is going to be doing something very fascinating this year, considering it's really politically based. And with the new elections coming up, keep your eye on this because there's going to be some extreme volatility. But from 2016, we've talking about revenues going from 2.1 billion to today, we're only looking at about a 2.3 billion, which isn't the massivest increase, but we're still talking about growth here overall. And I'm telling you, in 2019, this stock is going to see some pretty decent growth. Considering in 2018, the stock went from 2.3 billion in revenues to today, where it's trading at 2.48. We're not talking about massive increases, but similar to waste management, it's completely circumstantial around basically the growth of the economy and, you know, growth of population. And this is where most of the correlation comes in, because a certain amount of the population is always going to end up dealing with the law to some extent. And I really think you should pay attention because this stock has some real potential behind it with the new contracts they have coming into fruition globally. I mean, this company's got things in Australia, Europe, the US. They're kind of all over the board with this stock. And taking a look at the dividends, guys, this is where things get really interesting. Now, the problem with this stock overall is the dividends are going to be very, very wonky because this company deals with a lot of different stuff when it comes to the government. But when you're getting over a 10% yield, which is higher than the average rate of return of the market just within the dividend, I mean, this is something that you should be interested in, considering from 2015, we've actually seen a dividend decline, even though revenues are up. It's kind of going to fluctuate a little bit, so it's something you're going to have to stomach with the stock price along with the dividend as well. But considering that this company's been able from all the way from 2012, their dividends have actually increased quite substantially from 2012, but I think it's going to stabilize out over time, and we're actually going to see an increase in the dividends moving into 2020 here. It's just my personal prediction. I just wanted to shine a light on some dividend stocks for you guys today, and I would love to know what one of these interests you the most. What ones are you paying the most attention to, whether you own them or not? I know people that have personally been buying all of these stocks to some extent. Some of them I question why they've been buying them. These are fascinating stocks that have some weird correlations in many different sectors. If we're comparing something like Waste Management to GEO Group or Carnival Cruise to something like Cineplex, I really wanted to give you guys a diverse perspective today on many stocks that people find interesting. So let me know for sure what you think about these in that comment section below. And consider slapping a like and subscribing, guys. I hope you enjoyed your family day-long weekend. I figured I didn't post yesterday, so it'd be fun to make a video. But stay cool. Stay awesome, guys. And I look forward to talking to you tomorrow.